Yo, what up, everybody? Welcome to the session here. My name's Rodrigo. Welcome. We're going to be here with Matt Maley, Chief Market Strategist at Miller Tabak. He is also the lead trader at the Benzinga Stock Picks Inner Circle chat room, where he's pretty much whipping out trades in and out. We're talking calls and puts, very simple type of trades. No, not like spreads or butterflies, very simple stuff. A lot of you guys already know him or have seen him on CNBC or Bloomberg. He's all over the news out there. He's been doing this for 40 years in Wall Street. Currently, he's a chief market strategist at Miller Tabak for about 14 years around there. Prior, head of trading at Merrill Lynch, managing two of the biggest funds in the world, Fidelity and BlackRock. And also prior to that at Salomon Brothers, where pretty much Matt, he was trading as well. So Matt had about, he has about 25 years as a trader and 15 years as an analyst, but he's been trading throughout the 40 years. So Matt has 40 years of experience. He's going to be sharing some things with us today. We're going to be talking about trade ideas, education, options education, some technicals, some indicators. Make sure to leave your tickers at the end because that's when we're going to go over all that with Matt, tickers from the chat. And let's see if we can get these things going. We got a couple folks in the chat. What's going on? H. Pollitt, Hector. I think that's you, Hector, right? Carlos Cato, what's up, dude? Good to see you here again. Mary, you never miss one of these. That's great. Love to see that. I mean, I wouldn't. Matt's pretty, Matt's good. John Orozco, what's going on? Joe Ganan, Jeanette Silva, Salazar, what's going on there? Jeanette, Runji, Bruno team. Okay, so we have a very, very interesting crowd here tonight. We have a couple members as well from the chat room. And at this point, guys, pretty much I'm just waiting here for Matt to get set up. So I don't know. He should have the link. He has the link. Let me check. But it's probably some sort of technical difficulty, likely. But we're gonna have Matt here in a couple of minutes. We're good to go here. We're just waiting for him to log in. In the meantime, I'm gonna open something here and show you what we were doing today in the chat room. We're pretty much trading. I'll show you. Okay, so that is the chat room, what you guys are seeing. The Matt's important messages, that's where pretty much Matt is posting. So he will basically post entries, exits, all that sort of stuff when it comes here. And he's pretty specific about what he's buying. He's not like hypothetical or like maybe, maybe not. You get specific contract prices there, right? Like for example, SQQQ June 10th, $52 calls. So he's adding to those, right? And he's telling you exactly, he's adding, right? Little by little, right? If it's a big position, if it ends up being like a big position, or if it's a small position, he's kind of getting into it. But I'm telling you, some people say that, like you can't time the market, it's impossible. That's not true. Like, I mean, just join the chat room and look at Matt, because that's literally what we do every day. We're trading stocks and we're not like, swinging this stuff. We're buying calls that expire very soon, probably within the same week, and we're trading them, right? For a short period of time, a couple of days, that sort of stuff. Mary knows all about it. But okay, so I think Matt is getting set up here, but let me just give him a quick ring here. Hey, what's up, man? You're all good? Okay, I'm trying to find a recording, something that Matt sent. Um, so I'm trying to pull this up here, but um, I don't think, so basically I just got off the phone with Matt. So I don't think Matt's going to be able to make it today. He had something come up last minute. So we're going to try to improvise and just kind of, go with it, right? Um, so let's see what we can do here. Let me see if I can find this session. Yeah, we're going to see if we can. Okay, so all right, so I got somebody for you guys. I got Nic Chahine coming. So Nic is gonna come here. I know all you guys know Nic Chahine from the Options Inner Circle chat room. So pretty much we're gonna roll with Nic right today. Let me go ahead and show you a couple things here. 1 second, folks. So this is the live trading room. This is where Nic is, right? So what's up? You can pretty much text there. You can message Nic directly. And Nic is basically sharing his screen live throughout the entire day, Monday to Friday, 9 to 5. So you can literally be there in the chat room with him talking. It's a live webinar. So I believe we have
yes,
the man of the hour here, Nic Chahine. Let's go.
Yes, I'm here. I'm here to help.
Through,
my voice sounds a little under the weather because I've got something going on.
Yeah, I mean, yeah, a lot of people are getting sick, man. But look, I was actually in the chat room earlier today, man. There's a lot of activity, man, in that chat room. Huh? Is it like 300, 250 people live?
Today we had almost 300, and we killed it today. We actually murdered it. So what happened today was so this week, because we have choppy markets, they're not committed this way, they're not committed that way. I figured, okay, so we're spending all day in there instead of trying to catch runs, which we did. I decided to go ahead and since we've had the bulk of the people have been here for a while, so now I'm comfortable sharing some iron condors. So 3 days in a row, as soon as the market opened, we set up a trade using the SVX or the SPY, and it's a self-hedged trade called the Iron Condor. And three of them delivered 25%, 20 to 25% every day. So we take the bet, right? For example, this morning, do you want me to share my screen?
Yeah, let's go ahead and share it. Take it away, man. But yeah, by the way, folks, before we do get into all the stuff and everything, we got Felicia Rosansky here in the chat. What's up? I see you there. Loyal members here that've been here for a while. What's up? Nic, go ahead, take it away. Let them know that you also help like the day traders as well with that, with the live screen share, and also these longer time setups for people that work full time. Maybe don't
absolutely, yeah. So I'll run it down for you. So the service started like over a decade ago with Benzinga at one level or another with me. I met up with the company over a decade ago, and we've been doing the same thing, only modified and like improved on it. So every time I get a harebrained idea, I try it out and we love it, and then we blow it up to a different level. So it started with just sharing trades that every trader can do. Somebody that has a full-time job. I specialized in credit spreads because those trades are slow. They deliver 12 to 20%, and you don't need to babysit them. And you can set them up on your time frame to match your job, your schedule. You work nights, you work days, it doesn't matter. If you can give it 10 minutes, 20 minutes, an hour, a couple of hours a week, maybe here and there. So that's how it started. And then I said, okay, there's a need for a chat room. And we started the chat room, and that was super popular. And hundreds of people are in the chat room every day. That's not what you were looking at. The chat room is static. It's like a Discord where everybody can pop in it's open 24/7. You go in there and say something, I see it. You go in there and poke me, direct message, you can. So it's a place where we can communicate back and forth any point in time. You say, hey, I saw a trade last month. I took it. I'm kind of in trouble. I didn't close it, blah, blah, blah. It all happens in the chat room. What you were looking at before I took over the screen was the live room. And that is for somebody. So I took it to the next level. I said, I'm going to share my screen. What you're looking at is what they look at all day. So we try to find easy run-ups. And today we had a few easy ones. Like when the S&P fell late in the day, I said I would buy calls. I said it here, so it fell a little bit lower. Actually, I said it here. It rallied, it gave 10, 12%, and then it fell lower. I said, this looks like a fake out. I would stay in it. And then it did this. So if somebody bought it here, they paid, the trade was easy. It's just buy a call, just one call. And it was 50 cents, 48 to 52 cents. Up here, it was 82 cents. So whatever you invested, you almost doubled it. And it was literally just a few minutes. And I was confident that price was going to go back into that box. And it did. I thought it would close there too, but it didn't. That was pretty strange. However, it did go back there. It did deliver. Same with the IWM. So this is the live room. The live room does different stuff. So in the IWM, I saw something and I thought it would break out of here, and it did. I didn't trade it. They traded the SPY. So we had 2 or 3 runs. But what has been money was, at the open today, the market opened down, right? And so when it opened down, I sold this 40.70. Excuse me, I'm under the weather. This is what I sold. A credit put spread, and I collected 0.45. So it sounds like nothing, but that's about 8 to 9%. And then when the market rallied, I didn't time it perfectly, but I still won. I sold the opposite mirror image. So now I've collected almost $1 in total. And so all I needed is for price to be in between these at the close. And look, I didn't even sweat it. And that was pure money. So the way these things work is, somebody's super bearish. They say, oh, the SPX, SPY is going to collapse. I'll do my homework. I'll say, no, it's not. I'll sell them that put spread. I will sell them a lottery ticket. Somebody saying, oh, it's going to the moon. I do my homework. I was like, no, it's not. I'll sell them the call spread. And then nothing happens. So they both lose in my favor. Look, we did the same thing the day before that and the day before that and Friday. So 3 in a row this week. Super low key, but not everybody can do this because they have jobs. But the room is available. If you can pop in and want to contribute or participate, it's open all day, every day. I'm in here when the market's open. I'm in here, and I'm using the microphone like I am now. I'm sharing my screen like you're watching now, and we discuss everything. So who reported earnings tonight? Neo reports tomorrow. Somebody reported tonight. Somebody came to me and says, can you tell me how the stock is going to move? Shoot. It wasn't Billy, something else. Anyway, so I looked at the data and I said lower was easier, something that cost about $140. I said lower is easier. And sure enough, after hours, it's falling. I can't remember the ticker. So we discuss everything. Whatever's on your mind, we discuss it. But the primary point of this room was, let's see if we can make some money quickly. If we have time to be here, why not try to make money quickly? This way.
Really quick, I do want to emphasize that, like, even though it's trading, that you're trading the whole day with them, you pack so much education into everything that you do for them.
Yeah. So somebody said, hey, can you help me use TradyTix, which is a tool out there? I said, I'll show you how I use it. And I only use one part of it, but it's bulletproof. And I used it. And in fact, I used that one part in order to identify the IWM and the data for the earnings report. Gosh, I can't remember who it was. It's bugging me now. So the idea is we're looking for, first of all, education. And if we can make money along the way, that's great. By the way, these 2 boxes was about a 25-minute lesson, how I can use a debit spread like a credit spread. Now, if you don't know what that means, it should be intriguing to you. So credit spreads is what I love because they don't require anything to win. You place a trade, and if price doesn't go against you, you win. That's it. So if you think, let's say you say Apple, there's no way Apple can be at 100 in 6 months. You can make money off of that statement. You can say there's no way Apple is going to be 200 in 6 months. You can make money off of that statement. So in this case, I said, some people say my account doesn't allow me to sell a spread. I can only buy. Like, okay, so today I gave I wish I took, I wish I kept a copy of it. Somebody who's been with me for a while, he goes, man, why haven't you told me this before? I was like, I have, you just haven't listened. But so today I showed how we can do it with a debit spread. Basically buying a debit spread that's completely in the money, a debit call spread when the SPX was up here and 40 minutes to go. So it's discounted. So it should be $5, but it's not because there's still 45 minutes to go. So they give it to you at 4 or 420. So you buy it for 420. If the bell rings, it turns into 5 magically because the stock didn't fall. So if the stock doesn't fall, that 420 turns into 5. So yeah, you spend 420, but that's what a credit spread is. You sell a credit spread, you collect 80 cents, or you buy a debit call spread and you spend 420, $4.20. Same thing. So now this guy says he's going to do them all the time. I said, well, guess what? You can make this a fake iron condor with that same logic. You buy a debit put spread that's all the way out here that is not priced in at full price yet because there's 45 minutes. So if I had bought the debit put spread up here for 420, excuse me, and bought the debit call spread that's in the money here for 420, now I can make 80 plus 80. Yeah, I risked some money, but it's a sure bet unless something outrageous happens last minute. Either a super spike or a super drop. These are high odds, quote, boring trades, but man, are they satisfying. Like if you watched it, I'm going to look at my account tonight and see those orders disappear, because they expired worthless and then they refresh at a certain point and the orders disappear off your books for zero. It's beautiful. So we try to do everything, but the main point is education. Teach about charts. Man, is this educational. We talk charts all day. And even though we're talking 1 minute chart, 15-second chart, the concept is the same. They apply to 1 week chart. They apply to 1 month chart. Same concepts, same. So for example, this is a weekly chart on the SPX. Rallies into 4,300, I shouldn't buy. I should expect sellers. Okay, so if this was a 1 minute chart, rallies into 4118, I shouldn't buy. Same exact reason. It's 1 minute versus 1 week. Yeah, so it is the same, a 15-second chart. Okay, rallies into the same message. Rallies into 4117.5, I shouldn't buy. Rallies into 4116.5, I shouldn't buy until they prove that they can take him out. If it falls into 4111, I shouldn't buy a put until it loses it. Then I can buy the put. Same concept. They apply on a weekly, on a monthly. It doesn't matter. Chart, whatever it is. IBM, let's go to IBM. I don't know why I chose IBM. Okay, this is not an obvious entry point for IBM. So we discuss charts all day. We discuss concepts, fundamentals all day. We discuss options all day and strategies. And we do a lot of homework. Today, before the market opened, I shared my screen. I couldn't speak because I was super sick this morning. I'm still coughing. I went through probably 35 tickers. I had a list of 35 tickers. I cleaned it out and deleted them. And I moved them into here. So now they're tradable. I saw that there's a possible trade on Intel to catch the falling knife, which I did today. A possible iron condor on IBM because it's stalled. A possible long position on Starbucks, maybe, maybe not. Airbnb also. And all of these are tradable. Actually, these are trades I took and that are working out just fine. SoFi, it says not ready. Forget that. I closed mine because of balance in my book. So I cleaned this whole list, all in the name of learning, doing homework, avoiding the easy mistakes. So somebody popped in, hey, Nick, help me out. I bought a call. I bought a put on Facebook and I'm down. And I said, we discussed the details and we had a plan of action. So Sadly, it didn't work out in his way. He got stopped out at the wrong time, but I wish he had come back to me. I could have helped him out. But nevertheless, he did the right thing for stopping out and not staying in it until it died completely. So we try to do the right thing. We try to avoid the easy mistakes. So somebody came in and says, "Hey, what do you think of Exxon?" So what do I think of Exxon? I don't know. What do I think of Exxon? So I said, this nicest way of saying it, this is not an obvious entry. It took them 8 years to get back to even. Whoever's up here is going to bail. So the least I can say that this is not an obvious entry point. Now Chevron did the same thing weeks ago. So I don't know why Exxon is so late. Chevron took out its high and went to the moon. I happen to think that traders in oil companies are fine. Investors that are buying this stock for an investment, I think they're going to be stuck for a long time at some level up here. But I haven't been right yet, so we'll see. So we discuss fundamentals, we discuss bearish positions, we discuss bullish positions. Yesterday, I did a whole video on how to protect the portfolio with a very easy setup, very easy. I said when I would do it. I said what I expect the price action to be for the next couple of days, and how the people were going to react off of the CPI report and into Monday and Tuesday, and then what happens after Wednesday. So, of course, these are my opinions, they're not facts because I'm just guessing. But at least I have a plan, as they say.
Right,
And
Nick. And the other thing is that on Sundays,
yes,
yeah, Sundays you have, and again, folks, keep in mind the whole like the fact that Nick is there Monday to Friday, 9 to 5 p.m. Like that was not like that. That was all Nick. That was all Nick that said, I want to do this for my members. So I'm telling you that, and you even see him on Sunday, so,
yeah.
so what happens on Sunday?
So here, I'll show you what happens. I can't show you, I can't bring the thing live in here, but I'll bring this. So Friday, before we go for vacation, so to speak, for the weekend, I send out a form saying, give me the tickers you want to see. And by Saturday, I compile the data and I put it in a list, and I go through and I pull up and I draw a chart for each one and I make comments. This Sunday we had 146, actually a couple more came into. And what do? So I do the homework on Saturday night. Sunday morning we meet like this, share my screen. I run through all of this one by one. And I broke it up into 3 videos because the videos were too long. So then it's alphabetically ordered in 3 videos. So if you want A through whatever, you go through the first video, and it's easy to find your stocks. And these are hot clickable ones. This is a picture, but these are clickable. This is a Google Sheets, easy to share with everybody. And this is a shortcut for the Google Sheets. So every Sunday, twice on Sunday, you get something from me. You get this, a full webinar every Sunday. It's over 2 hours, I promise. You can ask what you want. You can pick what. I had a guy ask for, drum roll, 72 tickers. So I just about fell out of my chair. And it's not the most. The most asked for 82. But luckily there was a lot of overlap. So I don't know how you can manage a watch list of 72 tickers, but kudos for you. So this is the Sunday webinar in the morning, but late Sunday in the evening, I send out another 10-minute video. Yes, it's all Nick all the time, videos everywhere. The video will be a strategy video. So this week's strategy video was, I wanted to look at the small cap type of a deal, and it's just easy strategy video. I laid it out. So then we're not reacting willy-nilly during the week. I always refer back. Do you remember in the video I said this? Look, it's playing out. So when we do all this homework, there's no way we're going to fall prey to the easy mistake. So if you don't know how to do homework, or you don't want to do homework, I'm here. I'll do the homework for you. I don't mind. I'm talking every day to thousands of people, literally, and I love it. The chat room, the live room that you saw earlier with Rodrigo is so fun. There's one cornhole that comes on every once in a while. And I don't know if he's a jokester or what. He comes in and heckles and leaves. He hasn't done it in a long time, but it's funny. But everybody else is super nice. Everybody helps everybody. And I'm not the only one contributing. We have people that know levels, excuse me, inside and out. We have people that share their trades all the time. I'm buying a call here. I'm buying a put here. I'm shorting this with stocks. I'm going long this futures here. And that's all day. Nobody's allowed to post a win unless they actually posted an entry with it. So there's no Discord hoopla in there. There's just serious business. Everybody's super nice. You can't it's hard to describe. Here's what I can promise you. I can promise you with 99.999 certainty that you will become a better trader if you join our group. I can promise you that. I can whether I give you the best trades. Oh, and I do give trade setups, one a day almost, if not more, with videos. Like yesterday's video, yesterday or 2 days ago, it was 20 minutes. It was 2 companies. Today I did not do a video because I was under the weather. I just sent out the setup, and it was a setup kind of like saying I did this. So I said, so I can say I did something, and like I wasn't in love with it, but hey, why not? I'll try it. So you will become a better trader. I promise you that. And if you feel gypped, they will give you your money back. We've been doing this for over a decade. We wouldn't be doing this successfully if it didn't have value.
Just to be specific, it's a 7-day money back guarantee. Just
right. So if you're serious about trading, I don't know what the cost is, but you can rest assured if I'm in charge of pricing, it would be that much a month, not a year. Excuse me, because I know how much effort I put into it, and I know the level of studying, learning is. I mean, if you put a value to it, it's aha moments that will change your trading forever. Simple concept. I don't speak jargon. I'm not Wall Street guy. I'm an engineer. I'm a businessman. I don't do Wall Street. In fact, I can teach you options without saying one Greek word, maybe just delta, because that's the only name I have for it. And that's it. And so not many people can do that. You can complicate trading as much as you want. It is as simple as can be. The concept is insanely simple. Rodrigo, I want to give you a heads up that I am a hard stop at 3, if not 2:55.
What time?
Wait. No, never mind. 3:15, 3:20. I'm okay. Okay.
Right, it's 30 here, so.
Okay, so what we can do here, the program, I think, will benefit any style of trader, any level of trader. If you're a beginner, I think you will find overwhelmed at first, but then if you spend just a little bit time, first of all, we do have some static videos you can watch at your leisure at home, a whole bunch of them, from what's an option in general, what's a call option, what's a put option, what's a spread, what's a credit spread, what is a cash settled ticker, how is that different from the other ones, what kind of trades are best for me, all kinds of stuff. So if you're new to investing altogether, if you're new to options altogether, that's where you start. And then you come to me, right? Thank you. Those are them. And then you come to me and you say, hey, Nick, I watched that first video. I got completely lost at minute, whatever. Can you help me out? I'll spend a few minutes to point you in the right direction. And then it's all repetitive, baby steps. And then you practice with fake money. You have all the time in the world. You practice with fake money. And then you practice with one contract. And when you prove the concept, then you just say, okay, I'm comfortable now. I'll do 2 contracts. I'll give you an example, right? I just did a video, $97 a day. That was the video. I don't know why I picked $97 a day, but whoops, I'm so sorry. $97 a day. So today it was $88. Yesterday it was $110. One contract. Okay. So I'm trying to prove a point. The day before that, it was $105. And how does that work? I sell the spread and the day expires. I win on both ends. If I do that one contract a day, just one contract a day, that's an easy boost to my whatever I do, anything else. Like if I have a bad day with a call I bought or a stock I bought, I can just feel better about it having to do one trade and fix everything. So the chat room is there for our debate. But step one, if you're new, you jump in, you watch videos, you come to Nic in here. Where are you seeing now? You go in here. Look, click back on the inner circle chat, the main one, please. Somebody has a question. I got to go answer it. So Red is pretty funny. He's on the West Coast. He pops in at like noon West Coast time. Good morning. It's like morning. Just like the day is over. So he may have been sharing. So it looks like he shared a winning trade that he did on his own. But that's what happens. You can direct message me there, or you can just shoot the breeze. And then when you're comfortable, you go here. That is a live room, which sounds very daunting, but it is a ton of fun. 280 people. I promise you, you would be lost in there if you didn't want anybody to find you. You just sit there. You don't even need to tell me your name. So look on the right side. Some people say their names. Other people just say something else. Buckeye, fellow Jitster, that's the generic name for the platform. Green Puma. So it's a total fun. I promise you, it's not yip. It's just totally focused on trying to find opportunities and learning. Like somebody said.
Really quick, man. My email's blowing up. It seems like the chat members here have some questions. So some of the people that are watching, right? We're streaming this at about 3 different places. So good questions, guys. I just picked the most common questions that I saw. We're just gonna knock this out really quick, Nic, and then we can get back here into the session, talk about markets and everything, So,
yeah, cool.
All right. So does Nic Chahine go over trade ideas from the students? Yes, every single day. Are the sessions on Sundays recorded? Yes, they're all recorded and posted in the chat room, and you can get the recording as well if you're an Inner Circle member. Does everybody that joined get a free laptop? Yes, till midnight. Is this for new traders or just for like advanced traders? It's funny, good question there, Phil. It's actually we have both. We have a lot of new traders. We have a lot of advanced traders. The great thing is really when everybody starts helping each other and you really see what teamwork is really all about, what, being in a real community is all about. I'll tell you about it. Join and you'll see. So what is the chat room schedule? Good one there, Joanne. That is Monday to Friday, 8:30 a.m. to 5 p.m. And also you have a Sunday session with Nic. And that's from 10 a.m. Eastern till about noon. You guys pick the tickers. He goes over like 150 stocks. I mean, if you want trade ideas, just get in there on Sunday. That's it. But good question. Is there a money back guarantee? Yes, 7-day money back guarantee. And the price of renewal will be the same one as today, which is 70% off Memorial Day Nic special. And after that at midnight, it's going to go up to 2,000. So get it while it's not up there. Nic, I think I got the format right. Is there anything new that you're doing that maybe I missed that I don't know?
I don't remember. The iron condors, I brought them back because we're choppy markets. We're uncommitted when they were up, when we were down. The VIX, the VIX, the CBOE volatility index, the fear index that they talk about on CNBC, VIX. The VIX is high. It's been above its average for a long time for a reason. It's priced off of the options. The options are priced by market makers who usually place value on the things they're selling. They're market makers because they sell these options that you all buy, right? So they're not going to sell them cheap if they think the action is going to be fast and furious. So they sell them high because they think they think that things are volatile. So if they don't know what the hell is going on, the market is going to be choppy. Is not going to commit one way or another. So what works is an uncommitted trade, and that's the iron condor. So I brought it back, and I think I'm going to start sharing them again, like 8 or 10 of them a week. Let's see what we can do with that.
And the other thing, man, is that guys, you're going to be with Nic like 9 to 5. You're going to be talking about so many things
I'll give you an idea. So I'm expanding my base of knowledge. And I don't like to take tools. You can look at my charts. They're clean. I don't have 6,000 tools. I have a lot of lines, but they're hand-drawn. All of these lines are hand-drawn. If I show you the SPY, you'll go Google. So these are done for lower time frames. They'll make sense. So they're all hand-drawn. So I don't have a lot of tools. I have volume profiles. And when I need secondary opinions, I'll expand to see. Oh, I'm not sharing my screens. Okay, so can I take it back?
Yeah, dude.
I always do that. Where am I?
Someday, man. I mean, you put in hours. Everybody knows. Everybody knows.
Okay, so everything you see here is hand drawn. I don't have a lot of tools. I just have the volume profile, those bars on the left, and then I expand this when I'm actively trading something to see what the internals of that stock are like. And other than that, I don't have stuff. I keep it simple. I keep it all hand drawn. So we're not about complicated and fancy. We're about very simple. I want the easiest, most boring trade possible. That's what I want. And the trades I do should deliver 12 to 20% with absolutely no fanfare. But some people love action, and we tailor to that. If you want to be active, I got you. Like today, one guy was long puts of the SPY, the S&P, and they were at 410. So I said, if you get a drop to 410, book it. It's not going below. I said, there's no way it's going to close at 410, not even a 411. And sure enough, they rallied back and closed above 411. So he knew to book his profit, but he was right with his conviction. I was right with the levels. So we both made money. And because we both followed logic, we didn't defy each other out of spite. We didn't agree, but he made money because he listened to me and I listened to him. So I knew what was going on. I'll tell you one thing. There's a guy in my room that does not need to be there. He's so good with the levels. He is so accurate with the Fibonacci levels and the harmonics and all of that. He definitely does not need to be there. He spends his days there, and he's a futures trader. He doesn't even do options. So,
well, you have everything. You got day trade. So like, here's how I use it, guys. I'll tell you how I use it for my trading.
no, but my point is he's in
Yeah.
there to help out with the
Oh,
levels.
yeah.
Like today I was on Aaron's show, right? So Aaron was having a connection with that Ricks or whatever, that strip show, that strip stock, Ricks or something like that. Anyway, so apparently there was something going on Twitter. So I jumped on Aaron's show and filled some time. And I can look, I was looking in my left eye, and they were, what's his name? My buddy was helping in the chat room, sharing levels because I couldn't contribute because I was contributing live like I'm doing with you here. So I was like, I told the guys, you're going to lose me. You're going to see my screens and I'm going to be talking about stuff you don't know what I'm talking about. That's because I'm on a show. So it is a camaraderie in there. There's everybody helps. I have people that like to trade equities. They go in, okay, I just shorted Google. I just went long Amazon. There's Lloyd. Lloyd is in there. He loves to sell puts.
Lloyd has been there for like, I think Lloyd was one of the first people that I signed up for this chat room. I remember.
Yeah. And we didn't hit it off. It was combative at the beginning. And then he saw the value. And now he's like, he shares almost every trade he does. And I don't remember seeing one he posted that lost. They're boring trades. It's like me. He takes risk way below current price, way below, very humble. And then they win because they're high odds, low incident, almost guaranteed. And there's no such thing, but almost guaranteed. So the group works. I enjoy it. That's why I spend my days in there. I woke up today. Yeah. I can't tell you how painful it was for me to get out of bed. I was on the couch. I didn't even sleep. 3:20, my alarms went off, but I was already up, and I just couldn't get up. I didn't have coffee. You know what I opened at 3 a.m? I opened. Yes, I opened. By the way, if you ever have the flu or flu-like symptoms, Bang, the energy drink gets you going. I swear to you, as soon as I drank that, it was like, nice. But I knew that I had a purpose and I knew that I enjoyed it. So let's go, jump in. That's how fun it is. So teaching all day.
Really quick here, Nick, I just want to mention because someone has a question on the YouTube chat. And the Ghost and Neon, will this work for someone that has a full-time work? Thanks.
Yes. I'll tell you how. I'll give you an example. So this is Facebook. We're looking at Facebook chart. Um, the company is beyond reproach. You can think of it what you want. The proof is in the pudding. The company is beyond reproach. All right. So it fell apart. It went into the pandemic lows. So this is below when the world was shut down. That's what the level of stock came down. So it fell apart. I said, this is ridiculous. I'm going long Facebook, right? I shared a long video and I said, that is a pretty strong candle. I'm going to sell a credit put spread, which is, if you know how to do options, you know what that is. It's a trade that does not require a rally to win. In fact, the only way it will lose is if the stock makes a new low. That's the only way it loses. I said, if somebody does not want to do that, they can buy shares or they can buy calls or call spreads up here. Whoever did that, actually, I did it here. Whoever did that made all of that. That was an easy win. And then it did this. And then when I saw the scandal, I said, I'm going to repeat the same process. And I did. So these setups, you would get delivered to you in the middle of the day. They're not that time sensitive. 2 days ago, I shared a video about Visa and or MasterCard. I sent it after hours. I said, get ready. Tomorrow, this might be a good opportunity. It's not that time sensitive. It's not that exciting, but it could bring about 20% or 25% win in a couple of weeks if nothing really happens, either way, good or bad. So the trade was designed for somebody that cannot pay attention to the minute-to-minute action. I personally don't like to trade fast. I like to give me a set of circumstances. I like to plan around them and go do something else. So that's something else right now is to spend time with 300 other traders and try to help them make money and not lose money. It is, the trades are sleepers. They will fit in anybody's time frame. Now, on the other hand, first thing in the morning, I get into the chat room and the live room. I get a private message from Liz. She was at the Vegas event, by the way. I met her in person. Young person. She jumps in. Hey, Nick. I was like, what? Are you trading the SP? She only reaches out when she's trading the SPY. So I think that's, yeah.
Hey, Nick, really quick, man, I want to give a shout out to AJ Surgenor. Welcome, AJ, to the family. Let's go, man.
All right, AJ. Hey, hit me up in the chat room. I may be able to sneak a hi, but if not, tomorrow morning, jump into the chat room first thing in the morning. I will share a morning write-up before the market opens. In it, I'll give the link to the live room. I'll give you charts for the day, like what to look for, a comment about the day, and we'll go from there. So that goes for anybody that signs up today. I might not have time to talk to you this afternoon because I have a commitment right after this, and I still am under the weather. So I appreciate it. But anyway, what I was saying is, yes, to answer that person's question on YouTube, it is for any speed. If you want slow, I got one a day, at least. If you want fast, Liz came in and said, help me with the SPY. I said, you buy here. And then I said, hopefully you exited. Yes, I did. In the afternoon, the SPY dipped. She goes, can we buy again? I was like, yes. I didn't talk to her after that. So I'm pretty sure she got another run. So that's a 20-some-year-old that is already doing this, probably has another job. So that's freaking insane. I love it.
The sooner you start this, the better it's going to be. It just makes you a smarter person, period. Like,
no, we're not idiots, right? Most people here watching, they don't usually pick bad stocks. We're unlucky with the timing. And it's part of it is our fault. Our human nature is to chase. People, we don't have weapons, right? We have our brains. Our brains tell us to, if we see people running, to book it in the same direction they're going. So on Wall Street, you have to do the opposite. You see a whole bunch of people running out of one area, you should go back there and see if somebody left a wallet. So that's how it is. Like here, somebody capitulating, oh, throw away Facebook. Yeah, I'll take it. Kind of an idea. Why did I do this? Facebook down here, listen to this statement that I've never seen this before. Facebook's PE, price to earnings, that's profitability. So that's how profitable is the stock, which is usually a forte of high growth companies like Facebook. The PE of Facebook was lower than Exxon. Wrap your head around that. A dying industry. The only reason why Exxon and Chevron is rallying right now, not because we're using more oil. In fact, we're still using less than the pandemic started. It's because the price of oil is fake right now. It's up on fake things. And so that's the only reason that Amazon, that Exxon and Chevron's P&Ls look so good, because of a temporary situation in the price of the commodity they happen to sell. Well, it's not right. Facebook was too cheap. So I was willing to run into the room to pick up some Facebook scrap. And the people who left the room and left their Facebook behind, and they missed out. So yeah, that was a good question. What else you got?
I mean, the number one, and this might take us a little bit of time, but let's talk about the Fed, about your best friend, Powell.
Okay. So how about we talk about the CPI and the Fed next week? I appreciate it.
Yeah.
Okay. The Fed is criminal. That's my opinion. Either that or dumb as stumps. And I know they're not dumb. He is a lawyer, a Wall Street guy. He is not an economist in an economist job, leading the biggest economy on the planet. That is just weird. But anyway, he is in there. So here's the thing. Everybody says worried about the CPI. What is the CPI going to tell you that you don't know already? Think about it. Everybody knows we have inflation. So I think the CPI comes out, we will have a relief rally. It doesn't matter what the number is, as long as it's not, 20%. So if it's some outrageous number, they will have a conniption and we dip. So if we rally, I want to buy a put spread to short the S&P, because I think we're going to have a conniption into Tuesday before the event of the Fed, which is Wednesday, I believe. The Fed meets Tuesday and they would deliberate Wednesday and tell us they have their press conference and all of that. I think that we're going to rally after the press conference, and the rally could be massive, but I'm not buying right now. I want to be bearish going into it because everybody's going to be freaked out. And if they dip on it, I want to buy the dip, because I think once the event is over, we're going to rally. And listen to the logic. He already told us what he's going to do. He already laid it all out. He said, I'm going to raise 2 more times last time. So this is a guaranteed raise and another guaranteed raise. And I can almost guarantee you that he's not going to raise ever again. In fact, he may need to cut rates by December. If Goldman Sachs is right about the doom and gloom, and JP Diamond is right about this, whatever he called it, tsunami or whatever he called it, of badness, we are going to have another QE. This is how ridiculous this Fed is. They spent trillions with the White House to reflate the economy, to create the inflation, and now they're poisoning us because they created too much of it. It is the most ridiculous setup I've ever seen in my life. I don't know what they're doing. So my plan is, as soon as the events are gone, there's going to be a sigh of relief. So I want to be long after the event. I want to be cautious into the event. So that's my plan.
Right. Are you currently bullish or just bearish on the markets, or just neutral right now?
Yes. Okay. So I am bullish in the sense I'm long Facebook and a couple of other stocks that I've disclosed. But I'm bearish short term. For example, Facebook, I bought a call, and then when it rallied, the call made me money. I didn't close it. I sold calls against it for this week. Actually, I sold them for last week. I sold them for this week, and I'm going to sell them for next week. What does that mean? You've heard it called a poor man's covered call. That's BS. The real name of that is called a calendar. So when I own a call out in time, it's like as if I own stock, because owning a call gives me the right to buy something. So if I own a call out here, +1. So what does owning a call mean? If we have some newbies of options, options are contracts. They come in 2 flavors. One flavor is called call, and the other flavor is called put. So if you want a visual on it, we'll do one here, and we'll put one here. So puts and calls. So don't get too wrapped up as to what they do. The call gives me the right to buy shares. It's like I lock my price. It's like me saying, you know what? I want to be long Facebook, but I don't want to spend 200, 300, whatever, what is it now? $210, $200, and I don't want to buy 100 shares and spend all that money out of pocket. I'm worried about the Fed, blah, blah, blah. So I will pay $200. I'm making that number. I don't know. I don't have it in front of me. And what does that do? It locks me in at $200 a share. So I spend the money, somebody takes the money from me, and that somebody that takes the money is on the hook. If I call my broker and say, hey, I own a call, give me my shares, that person who collected the money from me to sell me this thing has to deliver shares at that price. So if Facebook is up here, they have to go out, buy it up here, and sell it to me down here. So they're on the hook. That's their problem. So if I have that, I bought at 225. I own the 225 call. So what I did is I sold the 225 call for last week. It died in my favor. What does that mean? I sold it. I said, I will do the same thing as the person here. And they gave me money, 20 cents, 30 cents, so $30 per contract. And then it died. What does that mean? Price never got to it. Time ran out, it died. So what do? I repeat the process for this week. And the one I sold for this week died. I collected 38 cents. Now it's zero. Now it's like 2 cents. So what do I do tomorrow? I should have done it today, but I ran out of time. I'm going to resell it for next week. So now whatever I paid for this is much cheaper because I collected money here and it died in my favor. I collected money here and died in my favor. And I'm going to collect again and it's probably going to die in my favor. So these are called calendars. So I buy a call out in time. I switch calendars and I sell a call against it. So let's say price goes up. I'm not in trouble because I have to deliver stock at 220. And if it goes to here, I'm stuck, but I own the right to buy it here. So it'll be same. So it doesn't matter. I don't create risk by doing that. I just have to be good at knowing the levels. I don't want to sell one that goes in the money. So going in the money means price goes through it and runs. I don't want to limit my upside potential. So I'm long stocks, but I want to be cautious into next week, and then I will get long the indices out of next week.
Okay, what is your take right now, or do you have any take at all in the real estate, mortgage sectors?
I wouldn't touch it because if you think about it, what the Fed is doing, it's to kill that industry. I have friends who are developers on the commercial side for real estate. They had, 3 or 4 deals, which is a lot of deals for one group. They're big deals and they're all dead in the water because of financing. Nobody disagreed on anything, but the deal was done on 2.5% rates and now they're 4.25%. So that's huge money when you're talking millions. So they're dead deals, and that's a disappointment for that group. So that guy is not going to be spending money anytime soon, and it trickles downhill. So even though the give me a ticker. What is it? KB Homes, KBH?
Yeah.
Okay. So even though the stock looks attractive, it's hey, it's so much lower than blah blah blah, and it's at support. I wouldn't want to touch it because it's in the line of fire. And here's the reason: if it rallies, that means the whole market is rallying. Why would I want to inherit that one sector sickness? I would rather bet on the S&P in general or the Dow or something that doesn't specifically depend on interest rates as much. So I avoid that. I would avoid anything that has specific sickness to itself, like airlines. Airlines is another one. Cruises.
I have a question here from Lukal in the YouTube chat. Says, I have a full-time job at a prison, so there's no computer or phone. I've never seen this one. No computer or phone. I trade from 10:45 to 11:15, then again from 3 to 4 p.m. How can I use this to swing trade, Nick?
Okay, so you check your messages, you see the setup, you watch the video, and when you're at the computer, you try to deploy the trade or something close to it. Period. End of story. You visit the trade next day at your computer.
Right, because you do have trades. So this is something that I want to clarify for everybody. If you're new or just starting to get into options, there's different ways that you can trade options. You can buy calls, buy puts, or do spreads. things that are more longer in time, outer in time. And Nick explains all that stuff to you. But
Yeah.
if you are a quick trader, like for example, I day trade or short, a couple days calls and puts, there are people that do not have that risk tolerance and they just want a trade that they don't even have to look at the chart every day. They just sit back and collect premium, right, Nick?
Yeah. But that person that works in a jail, that's pretty cool, by the way. You can totally just watch the write-up on video if I have it. Most times I do. It's like 15 to 20 minutes. So you'll understand why I'm doing it. And in the video, I will tell you, here's where I think the S&P is going to do, because everything trades inside the market. Here's why I'm taking this position in this particular company. And here's what this company looks like. And here's why I'm taking the trade. And here's how you can take the trade. And I usually lay out 4 or 5 ways of doing it. And I'll tell you which one I like. And I'll tell you how I would stop out. So you watch the video, you read the write-up, you say, okay, this is not for me, I'm going to pass. You come back the next day. You say, okay, this is something I agree with, I can take it. So I would take it. How would you take it? Whenever you're at the computer, you go to take it, maybe price has moved. Maybe it's still available. Most often it is. If not, price has moved a little bit, you just adjust the trade a little bit. And if you don't know which way, you pop into the chat room and say, hey, Nick, yesterday you sent out a trade. I couldn't get to the computer fast enough. Is it still available?
Right.
Yes.
And
I'll tell you yes or no. And if yes, with a change, I'll say, well, if I'm starting it now, I'll do it this way.
And then even in the chat says, how much do I need in my account to start? Recommended amount to join the chat.
$1 million. 1 million. No. Okay. So because I share different ways of doing it, the smallest way can be deployed in the smallest accounts. So I'll give you an example. When I first started here, I said we do iron condors. That requires $400 in margin requirement. And there's no borrowing. The term margin in options is different than in equities. It's basically, if you have a $5,000 account and you open the trade I did today, your account would only have 49. They would take out $500 or $400 and say you cannot use the whole cash in your account because $400 is your maximum risk of that trade you open today. So you will have your entire basket minus $400. They call that margin requirement. So the $100 potential profit at the risk of 400 can be deployed in the smallest accounts. I wouldn't do it in a $1,000 account because I would never want to risk half my money on one trade. So what I would suggest is you join the group, you learn. You don't use real money until you come to a point to where you save up enough to trade. And it shouldn't be your nest egg. It should be some extra cash you have. But it's never too early to start learning, because in any case, you shouldn't use real money right away. You should learn the hell out of it before if you go to box, you don't jump in the ring and start boxing professionals. You're going to die. So you go in and you practice throwing jabs, you practice throwing crosses and uppercuts, you practice your footwork, you practice defense, offense, and then you go in and start flow spar. And then when you're ready, you jump in the ring and you start sparring. And then if you're good enough, you go fighting. Yeah.
Nick, let me ask you, man, do you think we are in a recession or we're going to be in one? What is your take on all that?
I don't know how we can be in a recession when there's so much money in the economy, but I don't, the government data is absolute garbage. I don't know if it's by design or just in inadequate accounting. I used to be a financial planning and analysis, which means I reported to CFOs my entire life. So I had to deliver data that is used in P&Ls and to put board books together. If I ever brought a report that had to be revised as much as the government revises its numbers, I would be fired on the spot. I would be escorted out of the building, not allowed to go back to my desk. It's unbelievable. The data is so wishy-washy. So don't put so much worth into the fact if we are in a recession or not. Who gives a shit? I don't care one way or another. All I know about is I know how to trade. I know how much money Apple is going to make to a degree. 1 rate hike, 2 rate hikes are not going to break it. You know what's going to break it? What's going to break the stock is the rhetoric from the Fed saying, I'm here to break you. That's what's going to break the stock, not the actual rate hikes. Not one company is going to get hurt from 2 rate hikes, but the stocks will get hurt from this idiot flapping his lips and the other idiot flapping his lips about raising and raising. Oh, we need to raise 6 times, 7 times, 8 times, 9 times. Yeah, we'll see. We'll see. So anyway, it's the rhetoric that scares people out of stocks. The companies, even those that are, I'll give you a perfect example. You've heard of a company called Upstart, right? So we traded it perfectly, Upstart. I kid you not. Not many people can say this. Look at this idiot. Look at this lunatic stock. Okay. So first time I traded it was July of 2021. I drew a box and I said, wow, this is quiet. There's no way a stock this violent is going to be this quiet this long. These are weeks. And then it did this. Luckily, we were long. And then it did this. And then we went long again. And then it did this. And then it did this and it crashed. I got long. I bought it in the mid 30s. It went up to 52, 53. So that was an awesome trade. And I bought it live in the live room. I said, I'm buying shares. I don't buy shares. And I bought shares. Let me show you. And I want you to guess why it fell. The stock lost more than half its value. It fell 62, 65% on earnings, 62%. Actually more if you count the next day. You'd think that they sucked to high heaven, right? You think that their P&L was so bad. They grew 150%, 156, I think. And the stock fell 60%. Why? Because somebody thought, oh my gosh, they could be liable for loan defaults. Boom, haircut. Yeah, so that was an opportunity. We will look for opportunities and see if we can make a trade out of it. We don't do anything willy-nilly. You know me, the acronym. I have an acronym that I never break. No, if I don't have a reason to take a position, I never take it. It's NTNT. No trigger, no trade. And if you think that the trigger has to be on the charts, it doesn't. No thesis, no trade. And the thesis has to be valid. I thought it was going to go up is not a thesis. You have to know why you thought it was going to go up. That's a good thesis. So no trigger, no trade. And somebody today said, oh, there's a headline on whatever. I was like, okay, so we say trade chart lines, not headlines.
Yeah,
what does
the
that mean?
one thing, Nick, is that like in the market of 2020, all the new traders that came in, well, everything was going up, so everybody felt like, you know, they were the best. But 2021 and 22 have been very difficult for retail traders.
Right.
So I think it's great that you actually pack all this stuff with education.
Right. And I'm telling you, I did say that. So in 2020, everybody got used to being long everything, buying every dip, right? Nobody lost money. On the way down, they're doing the opposite reaction now. Everybody's so comfortable shorting rips. There will be a rip that's going to break everybody's neck. Everybody is trying to short it. And it's probably the same people. Probably the same people that went long on the way up are now stuck shorting everything on the way down because they feel comfortable. There will be a time where that short is going to squeeze so fast in their face that the pain is going to be intolerable. Don't be open. Don't be shut to the idea that we can still make new all-time highs. Don't believe all the experts' words. They don't have a clue because these circumstances that we have now have never existed before. We've never had this set of circumstances before. It's $5 to $7 trillion of cash floating around. We don't have hyperinflation. That's a political talking point. My mother lives in Lebanon. That's hyperinflation. When your loaf of bread goes up 30% overnight, when your gasoline goes up 100% overnight, that's hyperinflation. When you need a bag of money in order to buy food, that's hyperinflation. What we have in the US, expensive things. I'm in the West Coast. I have been paying $7 per gallon for a while. I think we spend $50 a day on gas. How long do you think the White House will tolerate that? They will do something about it. Sooner or later, the price of gasoline is going to come down one way or another. What we do have is a policy problem, not an actual shortage. We have plenty of it. We just don't want to pump for it. That's it, which is pretty ridiculous because we pollute the environment shipping it from thousands of miles away. What's the difference? Anyway, the economy, I think, is too strong. That's why the Fed's doing what it's doing. So we can still make new all-time highs.
Right. And what I do like is that, look, there's a lot of stuff happening out there in the markets, Nick. But that doesn't mean that we can't profit in these markets, right?
Oh yeah, absolutely. If you're somebody said today, I don't know if she's watching. Um, somebody said today, it's hard to trade this market. I corrected them. It's hard to invest in this market. It's easy to trade in this. It's easier to trade in this market than to invest. How do you resolve the fact that Amazon is so cheap because it's inside the pandemic bottom, right? And we are this close to an all-time high. So let me show you two things. This is Amazon. This is the pandemic breakout. This is the crash. We were below the breakout, so we were inside the pandemic. That's 2019 levels. And then it bounced, right? Let me show you Apple. Apple is still 40%, if probably not more, 40% above its pre-pandemic level, 45%. So if the markets crash, I think this is the guy that's going to crash biggest. That, Microsoft and Google, they're still up in that, and maybe Microsoft. Microsoft may be up there. Yep, that's pandemic. They're still up here. Google. So it's the giga caps that are going to hurt first. And the IWM, the small caps, which is why you should pay attention to the small caps these days, RUT, IWM, TNA, TZA. This is the pandemic crash. That's the only index that actually went back to the base. They left a little gap. Why do they do that? Ugh. Why? You got to here, just finish it. Now they have a reason to go whoop. So if the small caps come to here, I'm going to get long big time. And look, from here to here, what is that? Fibonacci? That's 50% to the penny. Look at this. That plus sign is 50%. And tell me you don't believe in charts. So I call this a potential inverse cup and handle. So if this does that, where is it? Where's my drawing? Check this out. I'm giving you the bearish scenario that's actually bullish. So this is where the pandemic broke out. This is where we recovered it. And then we went to the moon. And this is where we bounced. So let's say this comes up here and fades. That's a lot of resistance. There's no doubt about it. Let's say we fade and we come back to here and we lose here. We're going to do this. And I will be a buyer from here on down. This is an inverse cup and handle that should fall this much, the technicians say. I say it's about this much. So I think we bottom, really bottom here, if we lose this one. So question one, what happens here? Right? Are the bears in charge? Can they do it here? What happens here? Question two, if yes, they can do it, then what happens here? And then what happens here on the first level of support? That's the big picture. If you know this in the back of your head, and now you know how to make decisions. You don't buy calls here. You don't buy stocks here. You see what happens in that R. And then when you drop to here, you get long with a tight stop. What does that mean? You take bullish positions and you immediately exit if you lose your support because you know that this is possible. You don't want to ride it from here to here. So it's easier to invest than to, it's easier to trade than to invest. I have a map. I know what to do at point A, point B, point C. This is resistance. I know there's going to be sellers here. So maybe this happens tomorrow. Friday, the CPI comes out. It's not that bad. Boing. I will buy put spread Monday, Tuesday. Whoa. And then Wednesday, they do this and they come back to here and then boom. I don't know. I'm just prognosticating here. So I feel like Madden, John Madden. Boom. Go from here to here and then here. So anyway, have a plan. It's easier to trade than to invest. Roku today rallied on some rumor. If you bought calls blindly, I don't know. Hopefully you didn't go all in. It's a great company. It was a buy. It was on my list and I deleted it because that was just too much, too fast. I deleted it, but I set an alert. I said, if it comes back down, let me know. Or if it takes out a level above, let me know. I don't remember what the levels were, so let's go see.
All right, I need to give a quick shout out here to our new family member. Keep in mind, you joined this group.
All
You
right.
are family. Like, it's as straight as it can be, man. Bogunto, welcome to the family, brother. Let's go.
All right, so here's Roku. Check this out. I swear to you, okay, I drew these lines ahead of time. This line was drawn ahead of time. I can go in and find this chart shared with the people somewhere that does not show the path. Look how it went along my path. So, and this is not a one-off, not because I'm a genius, because I understand price action and we get prepared and we're ready. So it's let me see here. Okay, so, okay, perfect. I just found it even better, even better. Check it out. Look, this picture I posted in the chat room in May. So here somewhere on the way up, look at it. This is it. Look, dip, boom, right? You see that? I drew it, hand drew it like I just did with you. Mic drop. So price action is very organized. Why? Because machines do it. The machines do it. In fact, I need to do this and take a picture.
This is what I was referring, that Nick will show you technicals and a whole bunch of other stuff. Like, you could call this a school if you want. Like, you're there.
Right. So if you don't know what this is, you know that I said buy here or buy here on the breakout. Either way, if you bought here, you made a ton of money. It's just insane how accurate machines are. And anybody that tells you otherwise, they have their head in the sand. Machines are in charge. So FCast, I'm posting somewhere, versus reality. So it is, luckily, we can do this stuff and look like geniuses in hindsight, where in fact, we're just reading the tea leaves that are there. Also, I did a video on Roku's earnings report, and I did that call calendar, only it was a call diagonal, I believe, and it paid double, even though the call we bought lost money, but the call we sold lost money twice as fast. So the cost that we bought for the lottery ticket for the earnings report doubled, because the one we sold the day before just collapsed because of the implied volatility crash. So we cover almost every angle you can think of. Algo flow, which is, I can't stand that word because it reminds me of Wall Street. Luckily, we have tools for that now. Harmonics, it's that green thing you see there. I don't know how to draw it, but I can use it very, very well. I pay for the service. I get the service. I don't pay for it. They're kind enough to open it up for me. So I know how to use them very, very well. And I share that on the day, like intraday basis. In fact, this is the page I use. Let me know if it gets too wonky. 3-4 times a day I do this, and I change the time frame to see if we can find a quick setup based on those harmonics. I go to 1 minute, I go to 5 minute. Like here, I would have said, okay, there's a dip in Tesla, and Tesla was a good moneymaker today for a few people in our room. I'll go 10 minutes and I get, okay, there's nothing there. So
I want to give you guys really quick a story that happened to me in the chat room with Nick and all the members that were there. I think it was 2 Fridays ago. I was trading.
It was 2 Fridays ago, because that was the Friday where Reddit took the S&P to the moon.
Yeah. So like basically, I had TQQQ calls, $33 calls that expired the same day. So there was a point in time where I was down 60%. So to quantify that, it's pretty much like, $24,000. And then I got into the chat room and I'm asking Nick, like, can you chart this right now? Where do you see this going? And he was there the whole time charting the Qs and the SPYs, to the point where I didn't sell for a loss. I waited and I sold like 2,000 contracts at 3:59 p.m. for a 30% profit, which ended up being $12,000. So the value, I mean, it's hard to quantify, but really I'll tell you that when you need it, it's there. And it's anytime. You pop in there anytime. You guys know I'm busy here. I can't trade all day, but when I'm trading, I'm in the chat room. I'm seeing what Nick is talking about. So
Yeah,
that is something
that was right there. That was there.
yeah, it
So
would
yeah,
push at the end of the day.
I remember that. I don't trade the TQs because they're too they're the quotes are hard to get to come by. If you're buying single legs, maybe, but I don't like to sell them anyway. But the QQQ will do the same job, only not as fast. Okay, yeah, great story. So the good news is that we watch out for each other in there. That's the point. If I can stop people, oh, I started saying that earlier. I don't think I finished it. I said most people in this group pick the right stocks. It's just we get lucky or unlucky with timing. So, oh man, as soon as I like today, that poor guy, he was long Facebook puts because Sheryl Sandberg left. So I kind of hinted, as like, okay, well, that didn't do anything. So why are you still in your puts? He goes, oh, I have time to manage it. That doesn't matter. You have time to manage it. And then he managed it that same day. So he said he had time, but he didn't. But it's better than just sitting and doing nothing. So timing was suboptimal. So he had a good idea. It just didn't play out. So when you take a good idea in your head and then you see that it didn't play out, don't be stubborn about it. I take losses all the time. And in fact, you have to practice leaving money on the table and practice booking losses, because when it counts, you need to know that you can do it. Trust me, it sounds silly. Most people are crippled when it comes to booking a loss when they need to. They like, no, I'll wait one more tick. It'll turn. Before you know it, you're down 90%. You need to know that you can actually force yourself to take the trade when you need to. Like today, perfect. Okay, so check it out. I'm going to give you a piece of advice. So if you have a piece of paper, go ahead and write this stuff down. The VIX is high, right? I have a rule for high VIX trading. I developed it for this group. I swear to you. I knew the rule in my head, but I didn't need to put it on paper. I call it the ABCs of trading in the high VIX. So you see the shortcuts? That's how important it is, because I type it so many times every day for the new people. Let's see if you can read it. The ABCs of high VIX trading on relief rallies, whether up or down, whatever, I'll explain. Let's say on relief rallies, let's say today was a red day and everybody was saying, oh my gosh, I wish I had insurance. And then tomorrow we pop and they don't buy insurance. So I don't get it. Or if you bought the dip today and tomorrow we open up and you don't book your profits. Or if you had a trade that was losing money and then suddenly we get a relief pop, and you don't close your problem trade. I'll give you an example. So today I told you I shared the SPY run up with minutes to go. I said this is going to happen, and it didn't. And if somebody was red and then they got to even about here and then green about here, I said, what are you waiting for? The ABCs, that's the C part. You had a losing trade minutes ago and now it's no longer losing. What are you waiting for? I can get more, yes, but that is not the right thing to do. In hindsight, it wasn't the right thing to do to exit. It wasn't perfect, but they still exited. Instead of a loss, they got some greens. So you have to practice, push yourself to do the right thing, even though in hindsight, it may not be the right, it doesn't look like, oh, it wasn't the right thing, but that's hindsight. You can't do that. So these are little tricks that you carry for a lifetime, And when you leave our group, hopefully you never do, you will be a better trader. You can teach your friends. Oh, no, you can't do that. You did what? No. And you're thinking to yourself, man, that was a mistake. So I get to say it and converse with thousands of people. I have 300 live people in the live room. I have hundreds more, I don't know, 500, 700, 800 in the chat rooms everywhere else. So I'm talking to all of you every day and I love it. It forces me to learn new things. Like somebody today popped in and started speaking Greek to me with, what did they bring? Gamma. I didn't push back because I knew they would not have known how to explain it to me. So I'm going to go research the chart they gave me to see if I can speak to it next time they post it. I don't need it. I have excellent information from the options themselves. I don't need BS gamma stuff. But hey, if it adds another edge to the knife, I will definitely learn it. So I learned harmonics because of Cypher in the room. I will learn gamma because of everyone else that brings stuff. I learned algo trading because everybody says the word and it drives me bonkers. So now I'm using it to make money. So I'm happy every time I hear it. We don't hide. We see a problem. Like I didn't like that two weekends ago, 2 Fridays ago, the trade that made Rodrigo money. I hated it because it did not act the way it's supposed to act. Price defied the usual logic. Luckily, it hasn't happened since then. But I said to myself, I was upset. I said, if this is the new reality, I'll go out and I'll learn it and I'll teach myself and I'll beat them at their own game. But luckily, I don't have to do that yet. I don't want to be inside of Reddit yet. So that's my spiel, man. We can do a couple of charts and then I have to go. I'm dead.
So yeah, so let's go over a couple of charts here. Let's I mean, what's the chart that you're looking at, Nick?
Today I looked at Intel. Boring, right? So Intel fell 5% today. I have no idea why. But I've been watching Intel for a while. So if you look at a weekly chart for Intel, so that's long term. It hasn't been in the 30s since 2016, 17, where it broke out in a big way. So that looks like a heavy head and shoulders. So it looks like it wants to come down back to 35. So I thought I would do a boring trade by selling some risk down here. I don't know if it's going to rally. People don't love it that much. It is a monster company. It's bigger than AMD and NVIDIA put together twice over. But nobody believes, I mean, nobody talks about it like it is. It is the monster they're chasing. That is no doubt about it. It will wake up soon enough. Meanwhile, I would sell a put down here to create income out of nothing on a bad day. But instead, I sold a put spread. I was testing it and it filled. So I sold the put spread down here. So the worst case scenario is me owning it at $35. That's it. If not, I made 14% on my money. So that is one stock. Eventually, I think it will wake up and go back into the 50s, but I don't need it to. AMD and NVIDIA, I'm not touching. Great companies, but they are broken from the standpoint of the charts. I'll show you. NVIDIA, oops, sorry about that, one daily. If you look at it, you can see if I draw a line right there, there is a head and shoulders. That's the head. That means it's going to like 90. Not necessarily it fills all of it, but resistance. If they lose this, remember that drawing I did earlier? If they lose this, there is definite resistance here and resistance there. I wouldn't trust it until it recovers this neckline. And I don't mean poke above it. I mean poke above it, come back down, poke, and beat that. AMD almost did it, but didn't. AMD has the same problem at 104, 100. I'll show you in a bit if you want. So don't trust the rallies in those two until they can take out that zone for AMD and take out this zone for NVIDIA. Otherwise, okay. I think they fail here. And if God help them, if they fail here, they're going to here. There is resistance, I mean, support. So there's not like straight down. This is a big consolidation level. So it's not straight down, but don't buy calls. Okay. Don't buy calls. Sell puts on bad days. When it falls, sell a put spread. Create income out of other people's money. Hey, what you want to be super bearish NVIDIA? I got you here. Here's your lottery ticket. Hopefully you lose. And then I'll give you an idea on AMD. I may have said it before. I apologize if you've heard it. During the pandemic, this is AMD, sorry. This is AMD, the problem at 104. Look, it's very similar. Head and shoulders, huge, right? And 100 to 104 is the neckline thereabouts. They poked above it and they came back to it today. I need to see them take out 110 to believe that 100. Even then, look, so otherwise you're going to 68, which would be fine, and I'll show you why. That was the mistake on the bulls part. When? Right here. That was July, summer of 2020, the most horrific week for stocks ever. Stupidest week ever. The month, the summer of 2021. This, what is this? What is that garbage? It's hideous. Look, Head and Shoulders here, never fired. See it? That should have fired. They should have done this. Then this would have been fine. Instead, they chose to go to the moon based on nothing. So anyway, what was I saying? Oh, during the pandemic. Is this the pandemic? Yes. So during the pandemic, the stock fell to here. I went out and sold October puts at 20. Where's 20? Right there. I said to somebody, I'll buy your shares at 20. The stock was here. They paid me $2,200 to buy their shares at 20. And then the stock did this. They'd never gave me the shares. And then the stock did this. And here I said, you know what? I'm going to do it again. So I went and I sold July, not October, July $20 puts. Actually, these were $22 puts. I apologize. And the July ones were $20. They paid me $2,200. So all I had to do is buy their shares at $20 and break even at $18, $19. Can you imagine? Yeah, they panicked. I ran into the room. I picked up their panic. The worst case scenario is me owning shares down here and breaking even at 19. Yes, all day. So I can't wait for it to do this, for me to go out and sell puts down here. Mm-hmm. When that happens. Panic. They panic. I'll sell them their lottery tickets. All right, I'm done.
Yeah. So really quick, guys, just want to let you know, even though Nic is partying right now, I'm going to show you a couple of recordings from the chat room that Nic made today, this week. A bunch of trade ideas. Don't go anywhere. But Nic, any closing remarks on your end on why the folks should give it a shot and just join the community with us?
If you're serious about leveling up your game, I'm guaranteeing you better trading skills, better stock skills, better logic skills, fewer pitfalls, aha moments that are super simple concept, plain simple English. There is no jargon. There are no egos. There's no judgment. The cost is nothing. I promise you, it's nothing compared to the value. If you can afford it, I would not, and you're serious about trading and getting better, I would give it a shot. You're risking nothing. They'll give you all your money back. No questions asked. All right.
All right. Well, Nic Chahine, man. Yeah, great. Want to thank you for being here, man, and always helping out the retail traders. So a big shout out to you, man, for all the stuff.
I'm lucky to have this opportunity, and with a team like you behind me, it looks easy. It's a lot of work on everybody's part. I appreciate it.
Yeah, thank you for everything you do here, brother, and I'll see you in the chat room tomorrow.
All right, see you tomorrow. Bye.
All right, folks, don't go anywhere. I'm going to show you some stuff here from Nic. All right, don't go. If you go, you're missing out on the best part. You always save the best for later. Like that's how we do things here. So we are going to show you some stuff, right? So keep in mind, again, remember, these are the educational videos that Nic was talking about. So we have the trade setup information, what are options, what are puts. I'm just going to go through this quick, and then I'll play the video from Nic about the trades. What is a spread, call options, definitions, credit put spreads, when to book or set a stop loss, when and how to book profits. And there's some more here. What type of trade is best and how to pick what type of trade, right? So if you want to buy calls, buy puts, sell calls or puts, or do a spread or a butterfly or a condor, or any of the other stuff that you can do with options, which is there's a lot. And that's good, right? So those are the educational videos, right? For those that are wondering how you can get into the live session where Nic is talking, doing like this webinar style thing, that's going to be this, what you're looking at. It looks like this, but you're going to see Nic's screen. He's sharing it and he's doing audio. So you can talk in the chat, you can chat him, and he can answer you by audio or by text, whichever one. So let's see. The other thing I want to show you, this is the main chat room, right? This is the blue chat room. And here you're going to find two channels. This is the inner circle chat where everybody's posting, everybody, including Nic. It's a conversation. It's a two-way street. Then you have Nic's important messages, right? And that's where only Nic can post in that chat room. And that's because we want you to be able to have all the information from Nic on the spot, right? You don't have to scroll and try to find the pieces. You're going to get everything there. Now, to get to the live session that we were, you have to click live session and then click this link. That's going to take you there. So now, if there's no other questions about the stuff, I can go ahead and start showing you these videos. So if you guys are okay with no more questions on the chat room, let me know. And I can go ahead and just start, pumping the videos out and we can start looking at some stuff. Let me know in the chat. But I'm going to post my email there if you guys have a question or something. Okay, looks like we're good to go. All right, make sure your email, if you have questions about the chat room, send them in an email. You have a 7-day money back guarantee, by the way. So can you show the navigations by minimizing the YouTube window? What do you mean, Svarnik? Okay, Mary. All right, let me just get these 2 questions from Svarnik and Olu, and we'll get this going. So show the navigations by minimizing the YouTube window. I don't know what that means. Show the navigations by minimizing the YouTube window. I don't know which YouTube window you mean. Okay, monthly payments. So we only have annual for this, for the chat room, guys. But okay, those are the 2 questions. You have my email. Let's go ahead and watch a couple videos here from Nick. Live chat details you shared. Yes. Yes, my friend. Okay, so let's watch this video. All right, I don't know how long it is, but let's just see what's up here.
Hey traders, Nick here, doing some homework after hours. This video is like a checkpoint before we get into some pretty exciting periods of time that we may face in the next, I want to say, 7 days. So let me lay it out first. Let's establish whether this was the bottom or not. It's definitely not clear that it is, so I would say assume that it's not. So this is a monthly chart. On that level, the bulls are in charge. You can't hardly notice anything wrong, right? And then you go down to the weekly and it starts to look a little bit more sideways, but still the bulls are in charge. So right here it shows us how important it is to not lose the low we just set not too long ago. If we lose the low that we did in May, middle of May, we will come down to here. I'm very confident of that, where we will find footing and enough buyers to bounce us there. So how will it happen? Probably a little dip, a rally. You can see it, a little dip.
Hey, you guys don't see the video? I click play.
A rally, and then a dip.
You're not seeing that video. You're not hearing that.
That's how it could happen. That's not my forecast, but it's definitely.
Okay, let's see what's going on here. Maybe I'll just share this window. Maybe that does it. I don't know what I was showing. Okay, so do you see now? Not the video, not my camera, like the actual video, like on the screen. Do you see the video?
How it could happen. So keep an open mind. I am more bullish than bearish, but I realize what's going on. So this is the weekly chart. Now if I go to the daily chart.
Listen to it all.
Hey traders, Nick here, doing some homework after hours. This video is like a checkpoint before we get into some pretty exciting periods of time that we may face in the next, I want to say, 7 days. So let me lay it out first. Let's establish whether this was the bottom or not. It's definitely not clear that it is, so I would say assume that it's not. So this is a monthly chart. On that level, the bulls are in charge. You can't hardly notice anything wrong, right? And then you go down to the weekly and it starts to look a little bit more sideways, but still the bulls are in charge. So right here it shows us how important it is to not lose the low we just set not too long ago. If we lose the low that we did in May, middle of May, we will come down to here. I'm very confident of that, where we will find footing and enough buyers to bounce us there. So how will it happen? Probably a little dip, a rally. You can see it, a little dip, a rally, and then a dip that will take this out. That's how it could happen. That's not my forecast, but it's definitely how it could happen. So keep an open mind. I am more bullish than bearish, but I realize what's going on. So this is the weekly chart. Now, if I go to the daily chart, it looks like the bears are actually in charge, the sellers, right? Now you can see clearly a channel that's descending. And you don't want to lose these lows that we just placed, because if we do, that's the same low I was talking about. We might gather a lot of steam, and by the time we realize it, we'll be down here, which should be a catchable drop. Okay, so that's the big picture. We are still selling rallies. That's my assumption. Whether I'm wrong or not, I would rather be wrong and wait too long than to get in too soon and grab another dip. So what's wrong with missing out? Nothing. All right. The price action today was pretty bullish from the sense where they started out in a hole and they ended strongly. The small caps led. That's the IWM or the RUT, and we were focused on them if you read my morning note. And my weekend recap as well. They have been correcting for months, way before the S&P. They have already hit bottom from the pandemic, pretty much. And so if maybe they are telling us, okay, we're done. But so far, they are still selling rallies. That's one that was sold. That's another, maybe selling, maybe not. I don't want to assume, okay? Now, what about the next few days? Here's my thinking. Now, you can follow this logic. And then after that, I will tell you how I would protect myself. Here's what I'm thinking. We go into the weekend nervous. So Thursday might be a little tough. Why? Because Friday morning before the market opens, we get the jobs number, and everybody's so focused, not jobs, CPI number. Everybody's so focused on them, even though they don't mean much, because we already know we have inflation. And more importantly, we already know that the Fed wants to raise one more time, twice actually. And they already have 6 months worth of quantitative tightening with the balance sheet. So there's no mystery. So what are they nervous about? They might be nervous about. I'll tell you what they're going to be nervous about next week. I've already read an article from, not an article, headline from Goldman Sachs and somebody else, I forget who. They are arguing over the outcome from here. Goldman Sachs and other people are saying this coming week, next week, is a monthly expiration. And they're saying it's one of the largest. It's not the largest, but it's close to a record. So it's like, I don't know, 3.5 trillion. I'm throwing out numbers. That's a lot of money to all expire without event, right? So maybe they want to sell off on Thursday to prep for Friday morning and being a week closing of the week. I can't imagine the markets are going to break records going into one of the scariest week as professed by these experts, right? Unfortunately, there are a lot of people that listen to these experts. I don't, but a lot of people do, so I have to know this. So my plan is, I want to be cautious now into Thursday. So tomorrow I would open a debit put spread for 3 weeks out, and I'll share with you the setup. What's the point? The point is I want to be already bearish to a degree, not full out bear, but to balance out my other longs. And what I think is going to happen is we're going to have a dip, and then we may have a relief rally Friday morning because the CPI number wasn't like extravagantly horrific. And that relief rally, I can use that to kind of short the market by buying puts. I wouldn't chase it. I would use to book profits in my longs. I would use to buy the cautious setup for next week, because we are probably going to have a conniption next week. And if we do, I want to buy it. That's the thing. I think that once that week goes away, we will rally. So I want to be cautious into the end of this week. I realize we could pop on Friday out of relief. I realize we could drop next week out of whatever. I want to buy that drop. So here's my plan. I have what I have. You know it. Long term, some things. Shorts, some other things like oil and such. I have credit call spreads in the SPX and the RUT, which I've shared all along. You can always assume I have those. Those are bearish positions that don't need a drop to win. I'm actively trading intraday, doing iron condors every day with the SPX because now it expires every day. So if you can join me in the live room, great. It's not for everybody. Next week, I want to be holding a debit put spread. And let me explain that position. So the position will be in the whatever you want. I'm going to use the SPY because everybody knows it. Here's the position. Debit put spread is where you buy a put and then you sell a put below it. And you get ready for a drop. So a $10 drop. If price goes through it, then you make your money. That's how it works. So you buy a bearish, we can delete that, such a noisy thing. Okay, so you buy a bearish position, and if price falls through it, you make money. So what kind of details are we talking about? Nothing too fancy. I'll give you specifics right now. Example. First question, what contract? They have like 3 a week. Well, since I'm buying a spread, I don't want current week because it's going to cost about the same. Why wouldn't I take it out a couple of weeks at least? So I would not use next week, which is the expiration of June 17th. That's the monthly that everybody's scared about. I would even use 1 week after that, at least. So, and what kind of parameters? I'll go get them and I'll share them with you. But first I want to share the idea. I buy a put. That's a bearish thing. If price falls, I make a lot of money. But the VIX is high, the puts are expensive, and they die immediately if we have a good day. That defeats the purpose. So what do? I buy that put, but at the same time, in the same order, I sell a put below it. So now I've gotten myself into what they call a spread. I bought something expensive, I sold something expensive. The total is about $3 per contract. So if I do one, that's $3 times 100. So it's $300. What will that give me? If the markets have a conniption and they fall through it, that 3 increases in value in my favor. So ideally, if the SPY corrects 5 to 10%, this 3 should turn into 1,000. So each contract could get me up to $700 in offsetting winnings. Why do I say it that way? Because you're losing on other stuff that you're long. So I wouldn't count it as profit. I'm not looking to short the market. I'm looking to create some balance, to give me some time to jump in and fix my stuff and figure out whether this dip is buyable. If it is, I wouldn't even do anything. I would just close this thing and call them winnings. But if I need some balance, this gives me some protection. It is not absolute insurance. So if it falls to 0, my portfolio will be hurt to a bigger extent. So I don't want to load up with these things. I don't want to take too much of these things because they're designed to die, like insurance. When I buy insurance on my car, it's designed to die. I don't want to insure a Yugo to the tune of a Bentley, right? So I want appropriate insurance. And if I do have a Bentley, I wish they would sell me insurance that doesn't cover.
All right, folks, really quick. I just have to make a quick important announcement, okay? Welcome. We have to welcome to the family, Hehe 76. Welcome to the family. Let's go. All right, cool stuff. All right, welcome to the family. Make sure you check your email, Dijo, Mama, okay? And let's get back here to the session.
Full Bentley. So I would just want to cover X part of it. So how do I determine that number? All right, let's say you remember the last bad day you had, a day where the market fell 2%. If you remember the dollar amount you were down, so how much of that do you want to cover? That's how I think about it. Like if the market was down 2% one day and I remember exactly that I was down $5,000, I'm making up numbers, then maybe I want to take a couple of these. I don't want to protect all 5. I just want like a quarter of it or something. So 2 might be enough, 1 might be enough. I don't know. Appropriate size is different from person to person, but that's the idea. I know what I don't want to do. I don't want to buy a call a put all by itself. That's too expensive. If I wanted protection, that's the way to do it. Like if I owned Apple stock and I wanted to protect myself at X level of Apple, I would buy that X put. That's it. In this case, that's not what I'm doing. I'm creating some balance, some insurance, some temporary insurance. So a debit put spread. And it works that if I get the drop in my favor, I could make some money on that to offset whatever losses I have elsewhere. Now, if I just wanted to short the market, That's a viable way of shorting the market. Now, how do I manage that? Let's say 2-3 days from now you feel better about things, or you sold your longs or something. You can just simply sell this back out. So I bought this and sold this to open. That's called a debit put spread. I reverse the process to sell it back out. I sell this, I buy this to actually get rid of it off my books. Maybe I made some money, maybe I lost some money. I don't have to wait until it expires. So that is a way to do this. Let me go get specifics for the next couple of weeks. All right, now we're going to get into the education on options part of the program here. This is the practice platform from E-Trade. I'm not recommending it. It's full of bugs, but it does do the job as far as demonstration purposes. Okay, so here are the contracts that are available. This is the SPY we're talking about. So there's the ticker. And they have one that expires tomorrow, one day, one on Friday, one next Friday. That's the monthly one that everybody's scared about. That's the monthly one because it's white. I'm contending that I would want to do this one at least. Why? It has 17 days on the clock. It's going to cost the same, and I'll show you. So if I choose this one, it has 17 days. Current price is right here, 415 and change, $416. So I don't want to go down here and buy. Look how expensive these things are. If I wanted to buy one put, it's going to cost me $850 just to buy one put. So what happens if price falls? That $850, if price falls fast, it may double in price. So it does provide a lot of protection. But look at this. Today the market was up 1%. 1% barely. Look at how much they lost. So somebody that bought these yesterday lost a quarter of their money in one day. That's not good insurance. I mean, that is good insurance if you know for a fact we're going to drop tomorrow, because you can make 20% right away on that investment in the insurance. So not a good idea. How can I mitigate that problem? So I would do a habit, a debit put spread, because that's all I do, credit put spreads. So here's what it would look like. I would buy a put and sell a put. So I would spend that $850 we just talked about, but I also collect $400 to actually do the opposite lower. So what am I giving up? First of all, I'm lowering my entry costs down tremendously. Second of all, I am spreading my risk. This is called a spread, two pieces. And so let's say today the market rallied. This one loses 20%, but this one gains. In fact, look, it gained more. So that lost, but I sold it. So it lost in my favor. The buyer of that piece of the whole order lost faster than I did. So overall, the pain is a lot smaller overall. So okay, the detriment of doing that is if we do get a crash, I'm limited to how much I can make. Earlier we said about 700, 650, something like that. So how does the math work out? This particular one here costs $350. Okay, notice it's $10 wide. 414, I'm buying the put. I'm selling the 404. So it's $10 wide. So why aren't I not paying $10? Because there's still 17 days on the clock. Anything can happen. Okay, so that's why they don't.
Hey folks, really quick, just want to give a shout out here to SBL 203. Welcome to the family here, my friend. Let's go. Cool stuff, guys. I'll see you guys in the chat room. Make sure that you check your email, SBL. Let's go ahead and finish here the session. We still have some more time on it.
Price it all the way. So there's still that time element. All right, so how does that work as far as owning the SPY? I don't need to own the SPY. What is my maximum risk? That much. That what I'm paying is my maximum risk. I would not let it expire in the money. Then there's no issues with that. So let's say price crashes, and 404 is not that far below here. Remember that the number I said, if we lose the low, we're going to go much lower. We were under there, so it is not that far-fetched. Why 17 days? Because it's going to cost. Look, I'm going to change this. This is expiration right there. I'm going to change it. I'm going to come closer in time. Look, this hardly budged. Yeah, it dropped a few pennies. Hardly budged. So now we're in that scary one. So it dropped 20 cents. Yeah, not even. So it's not worth it. So why would I pay $340 for 10 days and not $350, $10 more for 17 days, right? So I would rather pay more and do it here. So the disadvantage of doing it here versus the 1 week that expires sooner is that, let's say we do get a crash, this one will gain more slowly, but not by much. To me, that's a good bargain. So what does that provide me? That gives me the opportunity to offset some losses if I'm long stock. If I'm not long stock, buying this, I'm actively shorting the market responsibly. Why do I say that? I am not at risk of anything except losing what I invested. And let's say 3-4 days from now, this turned into $4 and I would just want to close it. I'll close it. I would have made $50 per contract. Let's say it turns into $3 and I decide, you know what, it doesn't look that bearish. I'll sell it, close it. I sell it to close it because I'm buying it today, the spread. And I would pay whatever, $3, $2.50. I would have lost $50 or $100. Notice that this is a debit. So if it doesn't say limit debit, I'm doing something wrong. And when I go to, and if I do one, I always do one because everybody's account's different. So if I do this, and of course now after hours, okay, there we go. And if this says resulting cash buying power, like something weird, then I'm doing something wrong. If you say snapshot analysis, some platforms show you, and they say maximum risk, unlimited, you're doing something wrong. So the transaction is very simple. I am buying a put close to current price. I am selling a put way below current price. Because I'm buying the one that's more expensive than the one I'm selling, it is a debit. Boy, this is a class on option spreads from A to Z. Now the reason is bearishness, scaredness, shorting the market, depends on the reason. I'm just being asked, how do I protect? How do I this? This is not protection. This is just offset. It will bring me positive dollars if the market corrects, period. And it's a finite number. I know if I do one, I get 650. If I do two, I get double that. But I pay double. So now if I do two, I'm paying $700. If I do three, same thing. Every one of those will give me up to, not necessarily, up to $650. How do I get that? If price falls through and stay down there,
everyone.
close to the expiration, this balloons into its maximum value. Right now, it's only worth $3. Now, there's some people that say, I only want to cover the crash. So those people would go like this, and the price drops. Watch. Now we're buying the 400. I will have to change that to show you. Not enough, actually. 380. It's too much. 90. Okay, Nick, you should have prepped it. There we go. So if I dropped it and I bought the 400 way below current price, and I sold the 388 way below that, look, I'm only now paying $200. So it's cheaper. I can also make more because if price goes through both, I can make more potentially in profit. But now I'm way down there. I'm already at a very low delta. So the odds of price getting here. So let's say we rally in the next couple of days. This is going to lose a lot of value pretty quickly. So I prefer, that's a matter of preference, to pay up a little more and move that thing up to where it belongs. 414, 404, 413, 404. Now, can I do 415, 410? Yes, of course. Now, I pay less. I make potentially less. So what's the difference? Nothing. Matter of preference. Matter of preference. So we are at 414. Okay. So this is what it would look like. $5 wide. Yeah, I can make it lower, $5 wide. So now I'm paying $180 or almost $200, and I'm right here. But the maximum profit is smaller. It's only $5 wide. So I can double my money, which isn't too shabby. Same idea, though. All depends on preference. Can I make it $1? Sure, but it doesn't make sense anymore for protection purposes. Can I make it $15, $20? Absolutely. How? I just go down here and sell. Whoops. Go down here and sell whichever one I want. I can sell the 391. I'm going to pay more, but now, for example, every $500 will give me that much protection, the difference between these two and that price. So Depends. I like clean cut, $10 wide, cost me about $3 and change. If we get a drop, I'm already participating. If we get a rally, I can withstand a couple of green days in the market. And that's about how I would do it. Sorry, this turned into a 20-minute video, but trust me, I think it's necessary. I've done these videos before. This is a good refresher. So if somebody wants to buy bullish positions, they would do the exact opposite on calls. They would buy a call here and they would sell a call above here. This is not it. So I would buy a call here, and instead of spending $600 and hope for the best, I would sell a call above it. That would be a debit call spread. Debit call spread. How do I win? I need a rally. How much do I win? I win this width minus what I pay. In this case, I don't know what I landed on. Looks like $5.50. So I can make $3 out of it. That's the maximum width. So if I did this for round numbers, that's $5, and I'm paying 2.25. So I can make about $2.75 for that. So how do I do it? Price runs through both. Then I make the money. But that's a bullish position. That's not protection. I'm just showing you how a debit put spread is a standalone trade that in this case offers some offsetting protection for a portfolio that is bullish stocks or indices.
Okay, all right, folks. So that was one of the videos there that I was showing you guys. And that video came out a little while ago from Nick. But basically, Nick will do those sort of videos, like educational videos, talking about trades. So basically, you know, like those sort of videos where he's talking about trade ideas, talking about setups, giving you lessons. Right now, there was a very cool lesson on spreads that he did there. Let's see if we can find some other videos there. Okay, all right, let's see what we can find here. Just dig in here in Nick's chat room. It's a bunch of notes, bunch of trades. There's a Visa set up there. Okay, you guys want to see this video about Visa? I think it's a Visa trade. See, that's the only thing. Let's see, there's a Visa trade. And then there are these charts that he did on Sunday. So these are the sessions that he does with the chat members every Sunday. So basically, you guys put in the tickers. He goes over all those charts and pretty much, you know, does a full breakthrough of them, right? And you can even put comments like, you know, I'm holding a spread here in this particular stock. These are my levels, that sort of stuff. Or, you know, hey, I want to buy this stock. What do you think? That sort of stuff. So, sorry, that's my cat that you hear in the back. But let's watch the Visa trade because I want to see what that trade is.
Hey traders, Nick here. Trying to come up with some trades that fit the current market conditions. So the S&P, the markets are uncommitted. Today is Monday. Market just closed. The day was greenish, but it felt negative. In fact, the score was green, but the bears were in charge all day. So we opened up big time, and then we drifted down all day. We had a little burst at the end, but the bears were in charge all day. So from a price action perspective, yes, the score was green, but it was down, 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 down all day. Every rally was sold. They are uncommitted, which is fine. It is tradable. How do you trade an uncommitted market? You try not to buy anything. We can try to manage our profits from the range that we have at hand. What do you want? You want boring conditions. You want boring tickers that don't have earnings. If you were in the chat room today, we did a trade that paid 25% and we didn't need anything. We didn't sweat much about it. The market opened up. I said, I'm going to short the market when it was up 1.3
3%, whatever, by selling a credit call spread in the SPX. And then when the market dropped, not exactly at the bottom, I did the opposite and I shared it. I said, now all I need is for price to stay between the top and the bottom, and that's what happened, and 25% yield. I understand not everybody can be in the live room. This is extra stuff. This was not part of the service. This came about recently for people who do have the opportunity to join us in the live room or the chat room. So if you're not there and you have the ability to be there, I encourage you to join us, because it's not just a lot of fun. We had almost 300 people there today. Everyone's nice. You don't have to contribute. You can just sit there and lurk. But the opportunity is there, and you can ask as many questions as you want. So the setup is basically taking advantage of this range that we have. I'm going to talk about Visa and MasterCard. I'm going to start with Visa and switch to MasterCard and show you the example. But first, I want to remind us of risk. First rule, size. What kind of risk size am I taking? I shouldn't take a position that's going to blow me out, especially if it's new to me. If I don't know how to do credit spreads, I should use paper trading, please. And then when I finally prove myself that I like it, I should use one contract and prove the concept and that I can repeat it, and then add contracts thereafter. Second part is the part I manage. So the risk, I make a decision, I move on, it's appropriate. The part that I manage is what are my odds of success? And I'm going to share mine. I tend to go conservative with the fact that I want high degree of success in my favor. Well, in order to make that happen, I have to give up something. And that something is how much money I have at stake. So I rather risk more money at a safer distance. Other people like the other side. That's fine. Find what suits your personality and do that. So I will share mine. Other people will usually, if they're more aggressive than me, they take mine and they just tighten them up, and I'll show you exactly how to do that. Also, I want to show you that don't forget to go through these 3 steps over and over. This is an overhead I used recently and I liked it. First of all, don't take a trade without a reason. And our reason now, we are range trade and we want to try to take advantage of that. Manage the odds, not the percentage, and be realistic about that. Don't sit on it and you come to me or you realize that, oh, it's a day left and it's at maximum gains or maximum loss. It's easier to fix problems before they develop into major problems. Exit strategies, also have in mind what you want to do should something go wrong. Okay, so let's jump in. This is TrendSpider. I'm trying it out. It's not my usual trading view. I'll do a video especially on that one. So for now, it works. This is Visa, no lines, right? And then the idea is, okay, for the last, 7 days, they have a range going. How about we make money off of that range? And one way to do that is to sell a call spread up here. I'll share everything in writing, so don't bother squinting if you can't read it. That red box is where risk lives. I sell a call, I buy a call above it, I collect a premium. I sell a put, I buy a put below it, I collect a premium. If Visa stays between plus or minus 5-6% almost, so that's a pretty big wide range. It's a boring stock, should be. It's a bank, it could move with banks here and there, but it is a financial technology company, so I think it will follow the market as well. So if the market do nothing, then this one should be boring enough that we can eke out a profit with that. Timing. I'm going to share the June 17th, which is 11 days, and I'm going to share, in MasterCard's case, the one from this week. The difference is, I'll show you what the difference is. Let's go to MasterCard. So it's a similar scenario in MasterCard. Range-bound trade. So this would be June 17th. Example, I sell a call spread. It's called a bear call spread. I collect a premium. I sell a put spread. That's a bullish position. I collect a premium. Total, no money leaves my pocket. And this is 11 days. If I wanted to do the same for this week, I have to get closer to current price. So if I'm busy at work and I can't pay attention to my trades, I don't have as big a buffer here. Okay, so these are not accurate numbers. These are just to represent, just a visual representation, okay? I will show you the accurate number here. So you got the point. a bearish position that does not require a drop to win, a bullish position that does not require a rally to win. What do I need to win? All I need is for price to do this ping pong in between the two, and then somewhere on expiration day, be somewhere in between the two, and then I win. So this way, I want to sell a lottery ticket to somebody who's super exuberant about it. I want to sell a lottery ticket to somebody who's super bearish about it, and statistically, they should both lose in my favor. And the premium I collect sounds tiny, but it is 25%, 20 to 25% yield in 11 days, or in 4 days if you do this week's. So the equivalent would be, let's say I risk $1,000 for this trade. Where can you buy a stock and risk the amount of money you risk and then get 25% rally to make your money with 85% certainty? That doesn't exist. Such a list does not exist. If it does, I'll subscribe to it. Okay, so let's go and bring the information in, the visual. Okay, so this is E-Trade's practice platform that I have. I do not recommend it, but if you have it, that's fine. Look at the scoreboard today. The VIX is green. That's the first one up there. Everything else is green, barely. The Dow is flat. So indecisive market. We had some extreme greens, some extreme reds, and some extreme flips intraday, super red to super green and vice versa. Okay, so having said that, we're looking at MasterCard. Let me start with next week's first. June 17th. If I do a visual for you here, this will be it. I'm going to zoom out one more time, just so you can see the whole thing into one window. I guess I can't. I was hoping we can. There we go. Okay, so this is the bullish side. That's the put side. Credit put spread. I sell a put that opens risk. So if you've never done credit spreads, that's a deep dive into credit spreads from an iron condor perspective. This opens risk. This limits my risk. So I'm on the hook at 335. I'm off the hook at 332.5. If the price goes to 0, that's the maximum I can lose. I know I didn't risk my family's money over that. On the other side, I sell a call at 382.5. I buy a call $2.50 higher. I collect another piece of credit. So now credit plus credit. That's money into my account. In this case, just over 50 cents. My maximum loss is $2 because I can't lose on both ends. I either get screwed up here or I get screwed down here. So $2, the reward is 50 cents. That's a pretty handsome reward. So it's definitely over 20%. Depends on where you end up closing, if it at all, if you let it die. And you don't need anything to win. How do you win? If in 11 days, price is between these two, statistically, this one has 85% odds. This one has 85% odds. Now, we can get blown out by a headline. No one can help that. I do have time to close it. It has 11 days. I can change my mind on either side at any point in time and close it. I don't have to open both. If I have positions already open with banks, maybe I don't do this side, I do that side. That will be balanced. If I'm not long enough, I do this side, I don't do that side, then that creates balance. It all depends. Every person is different. Okay, so this is with 11 days on the clock. Remember I showed you that I could do it differently, that we can narrow it with a 1 week closer, but it has to be closer together. Closer in time has to be closer in distance as well for it to pan out. Let me share that. So if I move from June 17th to June 10th, which is this week, so take it out of next week into this week. Now only 4 days left. It doesn't work anymore. Look, there's nothing left in credit because it's too far. It's too conservative. The market makers will not reward us for anything. So we would have to tuck it up closer to current price. Eyeball, this might be enough. I'm not sure. And this one is going to have to be like here maybe. Oh, that looks pretty close. Okay, so now we're collecting 50 cents again. You see that? Credit 50 cents. But look how much closer we need it to be. Whew, I'm uneasy about this one. That's pretty close. $10. You know, I bet you at the higher day probably it was up here. So I'm a little bit uneasy there. maybe this one would be better. That one would be better. It gives me another $2.50 distance, risking more money, collecting less, risking more money. Or if I'm uneasy about this one, I'll raise this one higher. So now I'm collecting more money, but I'm confident with support more than resistance. It all depends on the balance in the book. Okay, so I will write it up with the one that makes most sense to me. But if I do this one with only 4 days left, 3 after tomorrow, I should expect to be able to manage it on Friday. Because if Friday was an active day, then this may get under fire on either side, this one or that one. So it depends on the personal schedule. This is it. By the way, this works if I even go out in time. So if I want to do one for July, I can. I just want to avoid the earnings. Okay? Avoid the earnings. In fact, I may write it up also for July. We'll see. So I wanted to share this video because I thought it would make a pretty good example of how we can range trade something. So we're not certain which way the market's going to go, but we're kind of certain of the ranges that we have. Undecided. They rally, they drop, they rally, they drop. So the further out I go, the wider I can make it. So if I go 2 weeks out, I can go up and risk here and risk down here. So this way, I'm less busy managing this. You're saying, oh, you're tying up your, yeah, when you buy stocks, you tie them up for much longer than that. What's wrong with a couple of weeks, 2-3 weeks? It doesn't matter. Plus, if you do them all the time, you always have something expiring. So 3 weeks from now, if you deploy one for 3 weeks out, in 2 days, you deploy another one for 3 weeks out. So every week you have something expiring. So it's not a problem. Don't get roped. The typical people complain about the things that are points of contention is that's one of them. Well, you're tying up money. Yes. Well, what doesn't? How do you not tie up money? It's crazy. So at least I don't need anything to win, and I'm collecting in order to open my risk. Anyway, they're not for everybody, but they sure are the easy way to make money when you do have visibility. So these are called iron condors. Credit put spread, match it up with a credit call spread. Both of them are neutral. I don't need a rally. I don't need a drop. Either can happen. I can still win.
All right, everybody. So that was the session with Nick where he's talking about the Visa trade. That's what he was talking about there. So I think this kind of covered, gave you a good look of really what Nick is doing in the chat room. He's pretty much there all day. This is the other live room. Everybody that's there. I mean, Nick is not there, but there's 63 people there that are live there that I see. All right, and okay. So, folks, if you have any questions, we're going to put the email in the chat. Send an email. This will expire at midnight. And everybody that's there in the inner circle that you're seeing right now, that's the live session. So, just for you to know, right? This is the live trading session where Nick is there sharing his screen and doing all that stuff, talking, kind of like webinar style, kind of. And this other chat room is where he's posting the link to get into that chat room, right? And it's going to be this one. It says live session. He will always post this link at about like 8:30. I haven't even seen. You see, like 8:33. It's always at the same time. He's pretty consistent with that. So he'll put trades just like the one we just went over with Visa. He's going to put other sorts of trades, education. Within everything that he does, there's always education. And some of you folks were asking about what to do if you're starting. So if you're starting, I think you should go to this site where I'm at right now because it has so much good information. It helped me when I was starting to trade deeper into the options where you have, what are options, puts, like full definitions, like practical definitions that the average person can understand. Where it's nothing is meant to sound more complicated than it should be. So you have call options, what is a spread, credit put spreads, table breakdown, when to book or set a stop loss, when and how to book profits. This is really, that's a good one. lesson breakout versus swing trades. This is very important. Also, if you trade the SPY and do options on SPY, you need to watch this video. Please watch it. It's basically saying cash settled options using the comparison of SPX versus SPY options. Let's see, breakout versus swing trades. This is a good one for volatility traders, right? And then you have this one. This is really good because it covers all the types of trades and when to know when to use it, right? So like, for example, how to pick what type of trade, if you want to buy, sell, a call or a put, or do a spread, vertical spread, diagonal, all that stuff. Like Nic knows how to do that stuff and he can teach you how to do it if you want to learn that sort of stuff too, right? But he does all sorts of trades in the chat room. And also this one, what type of trade is best? So for all you folks that joined, please make sure that you watch these videos if you're new, right? If you're new to trading, I would really think it would help you a lot. Just, go over them, pen and paper, that sort of stuff. And the other thing I want to say is that for everybody that joined today, you are getting a free laptop. So just make sure that you check your email as soon, like after you sign up, because it's like an automated email that gets sent out. And basically it's like a form, you put in the address, and then after the 7 days, we pretty much send the laptop out. But you can always reach out, to kind of like, if you have any questions or things like that. So I think that does it for the day, guys. It's been a long one, but a very good and productive one. So all you folks that have been here paying attention to the lesson and all that stuff, great job. That's amazing. Nic has so much great insight about the markets that every time I get a chance to watch something from Nic, I'll watch it. So all right, folks, good session. Big shout out to everybody there. Let's go. And we're going to wrap it up for the day, folks. Have a great day. If you have questions, contact is in the chat. You can send an email. But for those that signed up, please make sure you're ready tomorrow in the morning. We're going to be in the live trading room from the morning going hard, right? These are volatile markets and there's a lot of money to be made, right? So that's what we're there. That's literally like why we're gathering there, to trade and make money out of all this stuff that's happening. Yeah. All right, folks. Thanks a lot. Have a great time. And I'll see you guys soon.